mics are on.
I hope they are. Good evening, everybody.
Good evening. And welcome to Oakville, Gord.
Nice to be here in Oakville.
Or maybe I should be saying welcome back, because I know you were here last fall to make a $750,000 donation to the Oakville Hospital Foundation to support youth and children mental health. So thank you very much for that very generous donation.
Well, it's nice to be able to do that, and we've got a great group here in Oakville, and we have a lot of our employees who actually live in Oakville.
Yes, I understand there's 10 tables of RBC employees here tonight. Welcome to RBC, and thank you for joining us.
So that's why it's sold out.
They are swinging from the rafters, apparently. So just to set the context for everybody, the questions that I'm going to be posing to Gord tonight are actually solicited from our members, and we tried to figure out what were the common themes, and we took kind of the common themes that we thought would be generally of interest to everyone assembled here. So let's begin. Are you comfortable?
I'm very comfortable.
Excellent.
I'm glad it's you and not Julia.
Let's hope that's the case. So the first question. In 2001, you became Canada's youngest CEO of a bank. What are you most proud of during this tenure?
That I'm still here 12 years later. You know, it's interesting. My predecessor had an expression, which was that one of the roles of a leader or a CEO was to leave the campsite in better shape than you found it. And I think when I look at what we've accomplished over the last 12 years now, it's been almost, it's very much that. I think in a lot of ways the bank is certainly more profitable. I think we crossed the $2 billion mark the year I became CEO, and this year, if you sort of annualize our 3 quarters, we're on track to close to $8 billion. But I think more importantly that the businesses have all grown. They're performing reasonably well, and I think that in large part is the role of business leaders generally, is to particularly those who run large public companies. I think it's different if you're an entrepreneur and you're a builder, but I think in terms of managing a large public company, it's constant improvement. And I think the bank today stands out, having performed extremely well, particularly in what has been a challenging industry. And most of our businesses, we feel, are in pretty good shape with lots of growth potential.
Excellent. So we've heard a bit of the success, but what's keeping you up at night? Anything lately?
Well, a lot keeps me up at night. Old age, insomnia, arthritis. There's no question we live in a very challenged world today, and I think the most challenging thing is really the unknown, and that's probably what most keeps me up at night is what you don't know is going to happen. I mean, you can plan for a bad credit environment, you can plan for bad markets, but when you look what's happened over the last really since 2007, we've on a regular basis been surprised with a lot of events that one would not be able to forecast or predict. And I think we still live in a very, a very uncertain world where there's going to be a lot of surprises. The easy answer is Europe. I mean, Europe is a big concern, how Europe's going to get out of its current difficult environment, but there's problems elsewhere in the world, including south of the border in the United States, which certainly has some structural challenges going forward as well. But when you look at the environment today in financial services, when you look at the problems that so many developed countries are in, there's a tremendous amount of uncertainty out there, and the toughest thing to manage around is uncertainty. And as I regularly say to our board, we want to hope for the best, plan for reasonableness, but protect against the worst. And it's protecting against the worst that is very challenging. What would happen if the Eurozone were to ultimately collapse? I mean, I'm not suggesting that's going to happen. In fact, I suspect it won't. But the probability is much greater today than it would have been 4 or 5 years ago. So there's still a lot of uncertainty out there, and there's a lot of structural challenges that countries have to manage through. And it's going to be a very difficult period in front of us. fortunately for everybody in the room, we happen to live in what is, and I can really say is the greatest country in the world today in terms of running a business and managing a corporation. There's a few that would be equivalent, like Australia and a few others, but we really are blessed. I mean, things are pretty good in Canada relative to elsewhere in the world, but elsewhere they're not in great shape, and that's something that we have to manage around. And of course, we operate in most of those countries as well. So.
And with the business leaders assembled here today, would that be your advice to them in terms of when they look out globally with all the uncertainty, is to protect against the worst? Or what type of advice would you give our business leaders here?
Yeah, I mean, I think that and you know, this sort of flies in the, or is counter to perhaps what was said by who I think is one of the greatest central bankers of all time, Mark Carney, which is, you know, companies should be investing, and I think that's true. But at the same time, I think you have to operate in today's environment, recognizing that we're in an economic period where we're not going to get significant, easy growth. You know, as I used to say, sort of from 2000 to 2007, the dumbest guy in the class did pretty well. That's not the case today. You know, it's a very different economic environment. I mean, when the economy's growing at 4 or 5% a year, a lot of mistakes, you know, can be covered up. I think when we look at today's environment, we're in for an extended period of growth, but it's probably going to be slow growth. That's not a bad thing. Companies and individuals can do very well in that environment. We've certainly historically been through many periods where, you know, we've had a decade of very slow growth, but I think that's the environment that we're going to be faced with, and I think people have to, you know, manage their businesses accordingly.
That is the top question that we got, was what do you foresee as the current economy going forward for Ontario, and how do you see it coming, you know, for the next few years, and what it will be in terms of operating in that type of environment for our business members?
Yeah, you know, it's hard to say what's going to happen in Ontario unless you talk about what's going to happen, particularly in the United States, but even, you know, China and Europe as well, and there's a lot of people with very different views in terms of what's going to happen in those regions, and I have very little confidence in anybody's economic forecast. Most of the great forecasters have been wrong over the last 4 or 5 years, so I'm not sure any of you should believe me if I were to provide you with my economic forecast. But when I look at Canada, as I say, I think, you know, Canada's going to perform, you know, above average, so that you know, I think our official forecast is that Ontario should grow somewhere between 2 and 2.5% in 2013 and 2014, which is about at the Canadian average, which I think is reasonable. And parts of Canada will perform slightly better. And that's contingent upon some form of growth, particularly in the United States, and reasonableness in emerging markets. And I think that's a reasonable forecast. But, you know, 2 to 2.5% growth isn't spectacular growth. It's you know, sort of steady as she goes. But, you know, that does, as I say, provide lots of opportunities for businesses to do, you know, quite well, and for companies to manage effectively. I think one of the things that we in Canada have to do better, and this is particularly important to Ontario and southwestern Ontario, where there is a big manufacturing base, is that we do have to find ways to take advantage of global growth outside of the United States. You know, we are still very dependent economically on what happens south of the border in terms of trade, and to the extent that we can expand trade activity with markets in Asia and South America and emerging markets, I think that's going to be a very important part of sort of Canada's, you know, ability to continue to outperform over the next number of years, and I think that's an opportunity for southwestern Ontario as well.
And when you look into that crystal ball, do you see any like shiny objects like the Stanley Cup coming towards Toronto?
If we get a team in Burlington, perhaps, it will come close to Toronto.
You are a Habs fan, aren't you?
Yeah, that's right. I'm not sure there's going to be a Stanley Cup this year.
That's probably true. Yeah. But in terms of you, now you're also involved as Tracy had mentioned with the Prosperity Council and with Mars, so you're involved in a lot of public policy discussions around competitiveness. So your advice to companies in terms of competing on the global market and even competing at home is to really get involved with the emerging markets. Is that where you see our advantage coming from?
Yeah, I think, Canadian companies have always been blessed to have, 40% of the global economy, within a few miles, if you live in Oakville. But wherever you live in Canada, you're within a few hundred miles of the biggest economy in the world. And as a result, our trade patterns developed that way. And I think today we live in a global world where I think, Canadian companies have to continue to find ways to become more global. And I think that's it's the same case whether you're in Australia or whether you're in England or whether you're in Europe and even in the United States, although I think the U.S. has always been very much more of a global aspect to its trade. And I think that's something that, Canadian companies have to do. And productivity is something that has always been a weakness in Canada. It is an opportunity today with a strong dollar to enhance our productivity by taking advantage of the strong dollar. And I think companies are doing that to some degree, but I think that there's certainly more that we can do. I think the other, key part of sort of our ability to transform going forward is to make sure that, we're very well positioned in sort of the new economy. And that's going to be driven by innovation. It's going to be driven by technology. It's going to be driven by entrepreneurs and by small business. And again, a lot of that happens in Ontario and in southwestern Ontario in particular. But it's a globally competitive marketplace, and we have to continue to find ways to step up our game and to make sure that there's capital availability for small businesses and for emerging companies. There's venture capital available, and that we're nurturing and growing and developing companies that compete in the new world as well. And as I say, we do that, but I think we just have to recognize that it's a competitive environment out there, and the more we can do as a country, and whether that's government policy or what businesses can do, what academia can do. I think one of the great things about Canada is we do have an ability to actually collaborate pretty effectively across businesses because we are a relatively small country. And I think we've got to continue to find ways to make sure that we've got a good stake and we can play a leadership role in the new emerging businesses and technologies as they develop.
Now, you've mentioned innovation, and certainly one of the big financial news items has been the purchase of ING Bank by one of your competitors, although that's not been approved by the Competition Bureau. ING Bank has 1.8 million customers who do all their banking online with no branches. What does that type of technology do to transform the banking industry, and where is that going to lead RBC in the future?
Well, there's two parts to that. Firstly, they don't have 1.8 million customers who do their banking online only with ING, because most ING customers actually have to bank with other banks.
So you obviously check them out very thoroughly.
Very important fact.
Yes. Do your due diligence on that particular bank.
What ING did very effectively, to their credit, was they obviously brought a new model to Canada. And what they took advantage of, particularly when they came in when interest rates were higher, and how they attracted a lot of customers was through their high interest rate deposits. They were able to pay a significant premium to the Canadian banks because they didn't have the embedded cost base. With interest rates having come down so much and the banks having launched, I mean, we now have a high interest rate savings account, which is internet only.
I have one.
That's right. That margin has actually come down quite a bit, so that natural advantage isn't there. But clearly they've got a solid customer base, and they've been able to provide a product and an offering that's been attractive to a lot of customers and good for them. I mean, that's what competition is all about. But I think the second part of your question is extremely important, which is technology or interesting, which is technology and what that means to the banking industry. Our industry is, and I often say to our people, particularly when I'm speaking to our technology and operations people, that we're as much a technology company as we are a financial services company. And there's a lot of truth to that. And when you think of how you buy services today from a financial institution, it has changed very dramatically from what it would have been 5 or 10 or 15 years ago. I mean, most transactions now are done electronically. More and more technology is providing either new ways of executing banking services and transactions or augmenting the ability to do it. And there's a lot of very interesting technologies that are coming out. Mobile payments, as an example, which is something that I think will be very interesting from a small and medium-sized business perspective. We've now got point-of-sale terminals that you can just swipe your iPad and as a store owner, rather than having a terminal, you can just have an iPad and it can all be done electronically. Obviously, mobile payments from your telephone. The whole payment system is going through a tremendous amount of change and evolution, and it's very difficult to predict how it's going to unfold, but it will change, and we've got a lot of capable people sort of working on that and trying to figure out how it's going to change, because like every other sort of technology development, you sort of have to have your oar in every water, because you don't know how it's going to unfold. But there will continue to be a lot of changes. I mean, when you think of internet banking, electronic banking, I mean, it's almost an old technology now. I mean, when you go on your web page now, and hopefully you all bank with Royal Bank, we've got a spectacular internet offering. It's unbelievable what you can do in terms of moving money around from account to account, getting a list of all your accounts, your investment accounts, your bank accounts, your business accounts, your credit card balances, digital image of check. I mean, these are all new advents that weren't there 5 or 10 years ago, yet today you just sort of take them as being normal banking products and services. So it will continue to be an industry that will be very much driven by technology, which is one of the exciting parts of it.
Very good. And I'm going to switch gears and ask you about the housing market. There was data that came out today from CREA, the Canadian Real Estate Association, speculating that housing prices and housing sales would drop in the new year. We've had a lot of speculation about a housing bubble, household debt being too high. I'm wondering what you're thinking about the real estate market, particularly in the GTA. This is a very big real estate market here in Oakville.
Well, Oakville never goes down.
The mayor's going to quote you on that one. I think he just tweeted it.
I've been one of the more positive voices, if you will, in terms of the real estate discussion. And one of the things that I've recommended is that people stop talking about there being a bubble in real estate, because I think that's one of the issues is we're just inundated with press day after day talking about is there a bubble, etc. And I think one of the mistakes that is made is that people look at Vancouver condo and they sort of talk about Canadian real estate all as if it's Vancouver condo or even Toronto condo development, which are markets where there